Good morning, everyone. This is Bruce at Fleet Capital Management. It is Saturday morning, May 21st, 2022, and I am here in my office in a very sunny Bellingham, Washington. That's not something we get to say all too often, but it's very sunny and beautiful today. Springtime here is wonderful. Today, I want to run through some thoughts with you. Last week, we talked about historical market bottoms. I believe we are very, very close to a historical market bottom right now, and I'll show you why. And then, so part of today's webinar is going to be on how do we go forward, and if we're correct that we're close to a market bottom, how do we start to reinvest? What securities do we choose? How do we make those decisions? And I had gotten a question from a client this week is yes, maybe you have come off of the market bottom and it looks to you like the market's going to go higher. How do you make decisions on which securities to buy at which time? So I'm going to show you that today. I hope you find it interesting. As always, please comment. Let me know if you like this information, don't like this information, have ideas for future seminars or webinars, I should say. And by the way, I've been doing a lot of what I'm trying to do is teaching in these weeklies. You know, once we're out of this mess and we're back into a normal uptrend, these weekly videos should be 15 minutes. I'm going to show you what happened in the prior week and what I expect in the next week and what's going on with our investments. So, but right now we're in the mud, if you will. And so I just think that relearning, refreshing in our minds these concepts is important. I hope you agree. So let's move on. Of course, our disclaimer, this video presentation is intended for educational purposes only. The discussion of any security is not a recommendation to purchase or sell a security. If you're watching this on YouTube, which you probably are, you can subscribe to the channel. The benefit of that is you have that subscription and you will always be able to see all of the videos. For anyone watching, clients or otherwise, if you have any questions, Bruce at fleetcapitalmanagement.com. Any questions at all whatsoever, I love answering questions. I'm pretty rapid with responses. Or if you have an idea of something you'd like me to cover in the future, or even a stock or an ETF you'd like me to do a quick analysis on. Okay, some of you who have been with me for a long time actually may or may not know, I was a pilot. I had earned, and this is going to go directly into kind of our thought process today. I had first received, as everyone does, my single engine visual flight rule pilot's license. And then I went on and got my instrument rated license, and then my multi-engine license, and then my commercial pilot license. I'll tell you a very short story. If you picture a line break right here, I was a single engine visual flight rule pilot, which means I can only fly when I can see. That's what I'm licensed to do. I can't fly in clouds. I can't fly in weather where I can't see outside the airplane. And I went down to Fort Lauderdale and picked up my brother-in-law. We're both scuba divers, and we loaded the plane with our scuba gear, and we flew from Fort Lauderdale out to the islands, the Bahamas, and there was an island that we wanted to go diving at. We landed on that island, a very tiny little place. Actually had to fly over the runway to get people who were sunbathing to move their chairs so you could then land. It was that small. And we had a fabulous time scuba diving, loaded up the plane after a couple of days, and we were flying back. Now, we're flying back to Fort Lauderdale, and whether you've been to Fort Lauderdale or not, you can probably imagine you're flying over the ocean, and then you get to the coastline, and the coastline is nothing but very large condo buildings. And we're flying, and I'm just about in those condos, and it's called a microburst. A cloud burst open, and it started to pour, but I mean pour to where the prop of my plane was 6 feet in front of me, and I could not see the prop. And I'm now entering condos, and I'm registered only as a visual flight rule. So I picked up the intercom and I called ATC, which is air traffic control. And I said, ATC, Fort Lauderdale ATC, this is single engine 66076. I'm a VFR pilot, visual flight rules in IMC, instrument meteorological conditions, and I'm in the condos request vector. meaning that's a way for me to saying, help, I'm about to die. And I mean, I was that scared. I did not want to hit a condo. And the ATC controller, it was a woman, I'll never forget her voice. She came on and she said, Cessna 66076, I have you on visual or radar contact, which means she can see me. And she gave me vectors, which means turn this, turn this, turn this. And she took me back out of the ocean. So if I did have a problem, it's just me. I'm not going to hit a condo and kill somebody else. And I circled out over the ocean for maybe 2-3 minutes, and then the microburst cleared. I could see, and I went in and I landed. A couple of takeaways from that. Number one, ATC people in the United States are the best of the best of the best. They're extraordinary people, very hardworking people, very high stress. Remember, they're working with commercial pilots and small jet pilots and rookies like me. And so it's a hard combination to deal with. The second thing is, once I landed and got off my knees kissing the ground, I called my home flight school and enrolled in instrument training because I never wanted to do that again. Having those instruments are what saves lives. And we're going to talk about that in investments. That's why I bring up that story. Of course, when I signed up for my initial flight school, I thought I was this guy. Actually, can't wait next week till the new Top Gun comes out. So I'll think I'm him again. But every new pilot thinks they're Maverick. And I thought I would be flying these things. That wasn't actually the case. As all new pilots, I learned in a Cessna 172. There's 172s and 152s. 152 is a little bit smaller. It's a 2-seater. 172 is a little bigger engine, is a 4-seater. That's what I learned in. And so my vision of being Top Gun quickly vanished. But as I moved through the ranks of all of my training, I started flying these planes, twin engine, 8 to 12 passengers, fairly powerful, and just had a phenomenal time flying those until I ran out of money budgeted for flying, because flying, it can be a sickeningly expensive hobby. Now, why do I bring all this up? When you are a new pilot, sometimes it's even on your first day or first week, your instructor teaches you what arguably is the single most important lesson in any pilot's life. And I don't care if it's a private pilot, a visual pilot, which we all are when we start, an instrument pilot, a commercial pilot, a fighter jet pilot, or a NASA astronaut. They all do this first lesson every time they go up in the air. And that first lesson is they get a weather report, they look at the sky, and they make something called a go, no-go decision. It is the most important decision in every pilot's life, like I said, from first day to NASA astronaut. If you've ever watched a space shuttle launch or any type of launch from NASA, the commander on the ground will call to every single department, from electronics to communications to weather. There might be 30 or 50 departments, I don't know. And he will call out their name, and then that person will respond with either go or no go. It's as simple as that. And if any one person calls out a no go, the flight doesn't leave. So that's why go, no-go decisions are so critically important. And we're going to talk a lot more about that. I'll also tell you the downside of not learning that lesson is I'll bring up John F. Kennedy Jr., who very tragically, died in his small airplane with his wife and his sister-in-law. I believe they were taking off from Boston. They were doing a real quick, short hop over to either Martha's Vineyard or Nantucket. I think it was Martha's Vineyard. He got his weather report and he made a very bad decision. He made a go decision. He figured, it's a short flight. What could happen? The reports are that he even went to some flight instructors in the building and said, what would you do? And they said, no go. He went to a pilot there in the building that's for hire, who is skilled in instrument ratings and everything else. And he said, and John F. Kennedy was trying to hire him to fly them over. And that pilot made a no-go decision, a very good decision. And John Kennedy Jr. unfortunately made the wrong decision. He made a go decision. He was not properly trained. His plane, he became completely disoriented, turned upside down, he was inverted, and then dove into the ocean. So the only reason I bring that up is go no-go decisions are the most important decisions in aviation, all the way up to space. And I'm going to show you they're pretty darn important in investing. So we're going to go there as well. Okay. When you're a young pilot and you're standing outside, and there's always some other pilots around, and the older pilots love to give the younger pilots words of wisdom, which are critical. Two of my best ones were, I'll never forget the guy who said, "I'd rather be on the ground wishing I was in the air than in the air wishing I was on the ground." Oh man, is that true? If you've ever been up in a plane in violent turbulence and storms, you would give anything to be on the ground, drop your knees and kiss the ground. I'm also an avid sailor, and I have been in oceans where I and the boat are getting just beat to death, and I'd rather be on hard ground than on the water. So that was a pretty good one. And then the other one that every pilot has heard is this one. He said, there are old pilots and there are bold pilots, but there are no old, bold pilots. And I think I may have told you in another talk that we had, he pulled out his wallet. He said, would you like to see my flight license, my pilot's license? It's the size of a driver's license. We all have one, and it says what ratings we have. He took his out and showed me, and it was signed by his flight instructor. And his flight instructor was Orville. I can't think of his name right now, but it was Orville and Wilbur, the two great pilots that kind of invented flying. That was his flight instructor. He was an elderly man, so it was kind of cool to see that. So we talked about finding the bottom, and I'm going to show you why I think we are extremely close to the bottom in the market. But this time I want to talk about when will we get fully invested and what will we buy? What's the process in doing that? So the first step is we look at go, no-go decisions. And this is actually a software program that I have purchased by a company called Go No Go Trend Pro. So let's go over and take a look at a couple things. Before we get to the go, no go, actually I'm going to take you to the S&P 500. SPX is the S&P 500, and I want to tell you why I think we might be at or near a bottom. Let me get a drawing tool out here for just a second. And we're going to make it white so you can see it. I don't know if you can see down here, but this number is 3,800. And there is, I'm not going to spend time on this, but there is an enormous amount of technical analysis and technicians all around the world that believe, based on technical analysis, that this is in fact the bottom, 3,800. Now, they may or may not be right, but the analysis says that 3,800 or somewhere, it's never on the penny, but somewhere right in that area is a probable bottom for the market. Now, it may go down below that a little bit and bounce up. It may bounce around 3,800, which is what I would actually love to see. Remember, a V bottom is it comes straight down and it goes straight up. A consolidated bottom would mean it's going to bounce around that level. It's going to catch its breath. It's going to find its footing, and then it's going to go up. I actually prefer to see that. But a lot of technicians worldwide believe 3,800 is a potential bottom. Now, if it goes below that, does that mean that their analysis was wrong? No. What it means is historically, this is a long-term Fibonacci retracement of 618. And I've talked about that in prior videos. Historically, that is a place where you would expect support and a bounce. If it falls through that level and doesn't just sideways move, I think we could have a fair bit more below us. So the market can only do one of three things. It can shoot back up. It can go down much further. That's a possibility. or it can consolidate and go sideways and then make a new decision, which will probably be back up. Okay, so that's why we think the bottom is very near. While we're on this chart, let me show you also. Actually, I'm going to go over here for a second. This is my go, no go pro chart. I've shown you that before. The colors represent about 17 technical indicators that are behind this, and then they color the bars that suggest to you that the dark purple is a strong downtrend. The lighter pink is a weaker downtrend. Just to remind you, the amber color bars are just a sideways consolidation. It doesn't really mean anything. You don't make decisions on those. The light, I guess I would call this aqua, is a weak uptrend, and the darker is a strong uptrend. Okay, so that's all that's showing you. And I'm looking at the SPY, the S&P 500. On the right-hand side is exactly the same thing. It's just different analysis. Here's the SPY. Again, each bar is 1 day because that's what we're looking at. But on this one, I'm looking at moving averages. The green is the 20-day. The gold is the 50-day. The red is the 200-day. And in a normal uptrend, you will have the 20 above the 50 above the 200. That's called a bullish trend. We don't have any of that here. So for the long term, I'm using a daily chart. I also use weekly and monthly charts. I showed you that last week to get a kind of a bigger picture. And for the longer term, we're still in a downtrend until we're not. And we're just still in a downtrend. And for the longer term, we had this really strong upward movement for a couple of weeks. But that was nice, but that was a relief rally. We still had the 20-day below the 50-day and the 50-day below the 200-day. So we were still in technically a downtrend. So that is a longer term. I'm going to get to a shorter term in a second. Let me go back to this other chart. And you know I use a system called ATR, which is average true range. And I actually just a couple of months ago developed a dual ATR system, which is actually working much, much better. And when price is above both of these colors, we'll call them green and off green or whatever it is, generally speaking, that means we're in an uptrend. When it's blended and we have red above blue, that's a no, that just means nothing. It's not a downtrend. It's just a don't buy anything new. We're consolidating. And then it went back to an uptrend, and it went for a very, very long time. It was pretty simple. And it looks like, hey, that analysis should be really simple. And then we got, and this, oops, I apologize. Let me close that. Then this is September 17th of 21. We got a downtrend because we have the two similar color bars, and we went down a little bit, bounced back up to it, went down, but it really wasn't much of anything. And then we went right back into an uptrend. So no analysis is perfect, doesn't exist. This could have gone down 20% and everybody would have thought, oh, that was genius. But you know, sometimes it just takes time. And then we start going sideways. We have an uptrend, we have a downtrend, we have a no trend, we have an uptrend, we have a downtrend. And that happens also. And then we've had this fairly long, consistent downtrend since the beginning of the year. So takeaway from this chart is, for longer term trends, I use the go, no go, which is right here. I use the 3 moving averages, and I use and probably put the most emphasis on ATRs, okay? And that's for longer term trends. And I'm going to explain to you in a minute the types of investors and the types of securities that will be in longer term trends. The second thing I want to show you is there are also shorter term trends. And this is something new that I've developed and that I'm using, and you'll understand why in just a minute. This is the go, no go. It looks the same, but this is on a 30-minute chart. This is the same thing you saw before, but I'm using different moving averages. Instead of 20, 50, and 200, I'm using 5 and 20. So the combination of these two charts is for much shorter trends, and I'll explain to you. And then these lines, the red and green, which are critical, they're called ADX DMI lines, directional market indicator lines. And I really don't use these for longer term trends, but I've been using them for short term trends, and I have found they're very powerful. And they have been making a good deal of money. And I'll explain to you how that's going to work for you going forward. Okay, so let's go back to the longer term just for a minute. We'll start there. Here's our go, no go. And we have, of course, the ATR on the other computer screen. And this analysis, this level of analysis is for more conservative investors. When we get a go signal, just like it's okay to fly, when we get a clear go signal, we're above the ATRs, we have a go on here, and the 20 is above the 50 and the 50 is above the 200. Okay, that's a go. Then you will be fully invested in, of course, you'll always have some defined asset ETFs. You will then have some non-defined ETFs, which are really trying to increase your rate of return. You'll have some in the SPY, and you'll have some in the Qs, which is the NASDAQ, and some others. And you'll have some individual stocks that in the past have made us a lot of money, but those are longer term trends, okay? So if you're a more conservative investor, and I generally, this is very general, try to segregate my business into people who say downside protection is more important to me than upside results, those are conservative. And then the second group, which is I want to try to get the best upside results we can. I still want proper risk management, but it's less important than getting the results. So two different ones. So the group number one, more conservative, is focused on this. And when I get those uptrend calls, those go calls, you will then be fully invested. And again, you'll have your defined outcome ETFs, you will have regular ETFs for growth, and you will have individual stocks, okay? For shorter term, a little bit more, I hate the word aggressive, but more active investors who are really trying to get higher rates of return, I've created this. It's not a new system, it's a shorter duration system. And in just a moment, you'll understand why this was so necessary. But when we get a go on just the daily chart and the 30-minute chart, so it's going to be much shorter time frame, you investors will then have, and this is again for very short term, excuse me, I'm on the wrong chart. Let me go to the 30-minute. There we go. You will then have access to, if you're an options trader, and I've been trading my options off of this over about the last month since I created it, and a month is a short period of time, but it's working like a charm. And you will also have leveraged ETFs. Leveraged ETFs, if the market's going up, we might buy a 2 times QQQ. So if the NASDAQ goes up in a very short period, 3%, we'd be up 6%. If it goes up 5%, we'd be up 10%. The other benefit of this particular system is if I get a sell signal on this really short term, and mostly we're looking at 30-minute, that becomes consistent with daily, then we can use inverse leveraged ETFs. And if we get a sell signal, there was one right here, right there. If we get a sell signal, we might use an option that profits from a downtrending market, or we may use a leveraged ETF that profits on a downtrending market. Now, the leveraged ETFs, I have had one of the big weaknesses that I've had in my systems is having a trigger for the downside when the market's going down. And I realized, because it can't just be opinion, it has to be a mathematical trigger. So for leveraged ETFs, for the more conservative investors, if we get a 5-day that crosses below the 20-day, and that happened right there, we will buy a leveraged inverse ETF that takes advantage of a downward market trend, okay? If we get a 5-day that crosses above the 20-day, we may buy a positive leveraged ETF and just try to ride it up. Now, these are investments that we may only hold for a week or two, but it will be a way for us to make money on those downtrends. And generally speaking, we'll focus, if the long-term market's on a downtrend, we'll focus on these crosses that support a downtrend. Okay, I hope that makes sense. For option trading, I'm using the direction of the trend, which here is down, and I'm using the ADX. Okay, the ADX, if the market on a shorter term basis is down, shorter term meaning 5-day below 20-day, and the ADX crosses red above green, which is negative above positive, which it did right there, we will buy an option that benefits as the market goes down. And we will hold that, and hopefully we will hold it for a week or less. That's what we are geared towards. Actually, I buy 7-day options, and some of them I'm out in 1 or 2 days. Some of them takes a little bit more, but they're short term. They're very short term. This is short term trading. So the trend is down. We get an ADX cross in the direction of the trend. We buy the option when it's going down. So now we have a mathematical system to squeeze more profit out of a downward market, which we really didn't have before. Now, let me show you something else. If we get a positive crossover in a downtrending short market, we will ignore it. That's called a counter trend, trading against the trend. We don't take those signals. And you can see it would have been smart not to take that signal. Right here, we have, this was on Friday, we had a positive signal on the short term, but we have a negative trend. We ignore the signal. We will not take that. That's a counter trend. So again, I know I'm throwing a lot out at you. We have more conservative investors, more active investors. For the conservative investors, we use longer term technical signals to get fully invested in stocks, ETFs, and to find outcomes that are very appropriate for more conservative minded investors. Now we have more active investors who will have a much smaller amount of their portfolio in defined outcome ETFs. And we're using shorter signals, still daily charts, but instead of using 20, 50, and 200-day moving averages, we're using 5 and 20. So this is a downtrend. This is a negative cross. We might buy an option and try to profit off of that. Hopefully that makes sense. So lots of benefits to the massaging that we've done to these systems in, and I've done it in conjunction with some very, very skilled options traders and outside people. I don't want you to think this is ever just me making this up. It's not. The benefits are, for the longer term trader, we're going to get in and ride longer trends, longer upward trends. For the more active investor that wants better rate of returns, we now have systems in place, which we didn't really have before, to profit more on downside. I thought we could do it, but we didn't have proper signals. We had more opinions than signals. We now have signals. And I actually have these set up to where an alarm goes off on my computer if this happens. And I'll show you something else, just since we're talking about that. Here is a list, a long list of ETFs that I like to trade, okay? So what I have done is I have set up an alert system for each individual security that when this happens, I get alerted. Actually, I get alerted on the computer, on email, and on my phone. And so don't think I have to go through, I do go through and look at these every single day. But for instance, ARKK, and I'm going to use this as an example as well. ARKK is in short-term downtrend. We got a positive signal, we ignore it. But if we are in, and let me go back, and this is, I would probably confirm this with my longer term chart. We're still looking at ARK. We're in a clear downtrend. But when this changes And the first place it will change is in the short term, of course, and then that could evolve into a longer term. So the short-term traders may get into ARK long before the longer-term traders do. I shouldn't say long before, but before. And you can see this is trying to turn up, but it hasn't yet. So I have an alarm. If this crosses up or crosses down, an alarm goes off. Let me show you one other thing with ARK that I just thought of. Let me go back here and let's type in ARK. I know this has been technical, but I hope you are enjoying this. And let me go back to here. Let's just keep going back. So I'll just choose this. This is a couple years ago. This is in 2020. ARK, if you remember, most of you owned this with me. ARK was probably the investment that we made the most money on over a very long period of time. It just really just did an extraordinary job. And once in a while, if I got out of ARK based on my old system, I would get emails from people that say, why would you do that? Why would you get out of the best thing you own? It's just going to bounce back up. It always has. It always has. And that was one of the reasons I created this new double ATR system to help protect against that. But in any event, so we made a lot of money. This is called inertia investing. What's going up is always going to go up. And then if you look, this was the beginning. Let me see what this was. I'm sorry. This was February 19th of 21. And let me just double check here. Yeah. We got a full signal to go out and I sold it. I got a few emails that weren't very pleased and ARK just did nothing. It kind of bounced around. But then everybody got really happy that we were out because months later, November 19th of 21, right here, ARK fell out of bed and it went down about 70%. 70%. So why do we use these tools? Because we want to avoid that. And I want to get back into ARK. I believe in Kathy Wood, who is the kind of the mad genius behind ARK. And I want to get back in it, but I will get back in it when the signals tell me to get back in it. Sometimes, and just recently, this is the last thing I'll show you on this, ARK was going up, 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 you know, for like a week or two. And I had calls that said, hey, let's get back into ARK. That's such a great investment. But the tools were saying it wasn't the right time. And that saved us. That absolutely saved us a pretty dramatic rundown. So if you ever wonder why we use these tools, that's why we use these tools. Are the tools right 100% of the time? No, the tools are not right 100% of the time, but they're right a whole lot more than they're wrong. And so that's why we use technical analysis. And once again, what we covered today is, I do think we are very close to a bottom, but I don't know. Some analysts think this market could go down another 20%. I don't think it will, but some analysts believe it will. And now we have a system for the more active investors. We have a system where we will profit from that decline. Okay, we didn't have that before. We have that now, a much better system. And then what we also covered is that we have more conservative clients, more aggressive or active clients, and now we have separate programs for both that I think will make everyone very, very happy going forward. So that's the story with this. I know it was a lot of stuff. You can always rewatch it. I tend to talk pretty quick. Before we go, I just want to remind you, because some people have been using this and some people had forgotten, anytime you want, go to fleetcapitalmanagement.com, go to more, go to Bruce's calendar, click on the link below. You'll be taken to my actual calendar, and then it will ask you pick a day and then pick a time, and you will be on my calendar. You don't have to call me. You don't have to send me an email. It is all automated. So if ever you want to talk to me using Zoom, of course, I mean, you can call me anytime you want. You can email me anytime you want. I like Zoom because we can look at the same thing. Anytime, just please use this calendar system. It's so very efficient, and it sends you reminders. And then on the time of our appointment, all you have to do is click on that reminder link, and bam, we can see each other. We can see each other's screens, and we can go from there. So please use that and use it anytime. You don't have to call. You don't have to ask. This updates my live calendar live. It's connected to my regular calendar, so it knows where I am and what I'm doing. Oh, out of breath. So that's a story for today. A lot of technicals, but I thought it might be interesting also for the more active investors to see that we now have signals on the downside. I've been trading them in my own account, which I always do first. They're working nicely. And if we go lower, the next 30-minute down signal that we get, I'll start buying those options for you that go down. And I may start buying, if we get a daily cross to the downside, I'll buy you those inverse ETFs. So a lot happening, very good. I think we have finally hit a spot where I'm comfortable on the downside, investing money on the downside, and I'm very happy about that. So either way, now, of course, I don't hope that the market goes down. I hope the market just goes up. And I do think that between now and the end of the year, there's going to be enormous gains in this market. And I want to make sure that all clients, conservative and active, are well positioned to take advantage of those gains as quickly and as prudently as possible. And that's what this system is. As quickly, go back to the story I told you about flying into near the condos. That scary moment caused me to become a much better pilot. This downtrends in the market generally cause good money managers to go in and reevaluate all of their systems and just get better and better and better. And finally, on the downside, I think we have kind of nailed it. So both the downside and the upside, it almost comes to, just from a money manager's point of view, that it almost doesn't matter to me whether the market goes up or down anymore. It just doesn't. I want it to go up. We make the most money, clearly, when the market goes up. And I think that this year the market's going to go up. Will the bottom be next week? I don't know. Will the bottom be, a lot of people think it's going to be in July, and there's another group that think it's going to be in September, October, but there's going to be an awful lot of money made. Think about how much cash is on the sidelines, and I want us positioned to benefit from all of that upward market. So that's your time with me for today. Again, shoot me an email. Let me know if you like this, didn't like this, have any ideas for future content, and we will go forward and see what next week brings to us. Thanks for watching, and I look forward to hearing from you soon. Bye-bye.